Inflation is a persistent increase in the price of goods and services over time, and it can have a significant impact on the value of investments. When inflation rates are high, investors must navigate a challenging investment environment where traditional strategies may no longer be effective. However, history has shown that there are certain investing strategies that have performed well during periods of high inflation. In this video, we will explore 5 investing strategies that have proven to be effective during times of high inflation. These strategies are backed by historical data and have helped investors protect their portfolios against the negative effects of inflation. Whether you're a seasoned investor or just starting out, these strategies can help you navigate the challenging investment landscape of high inflation. Make sure to stay tuned and learn about these 5 investing strategies that actually work. Make sure you like my video and subscribe to my channel before we move on to our first strategy. Real estate. Real estate is a timeless investment that becomes even more attractive during periods of high inflation. As real estate prices tend to rise in tandem with inflation, investing in this asset class provides a natural hedge against the decrease in purchasing power of the currency. Furthermore, investing in real estate offers several advantages beyond financial benefits. It is a tangible asset that provides a sense of security for investors who prefer to see and touch their investments, and it offers potential for long-term capital growth and value addition through renovation or development. Moreover, investing in real estate during high inflation is not limited to residential properties. Commercial real estate provides investors with stable and long-term returns, as these types of properties often have long-term leases in place with established businesses, providing a steady stream of rental income and a reliable source of cash flow. In conclusion, real estate is a proven strategy that offers a reliable hedge against inflation. It provides not only the potential for capital appreciation and rental income but also the added benefits of a tangible asset and the possibility of adding value through development or renovation. For investors seeking a stable and secure investment during times of high inflation, real estate should be at the top of their list. Commodities. Commodities, such as gold, silver, and oil, have been a popular investment choice for those seeking to protect their wealth from the effects of inflation. During periods of high inflation, the value of the currency tends to decrease, which can lead to rising commodity prices. As a result, commodities can serve as a natural hedge against inflation, making them an attractive investment option. Gold, in particular, is often considered a safe haven asset during times of economic uncertainty. This is because gold is seen as a store of value that is not tied to any particular currency or government. When inflation rises, the demand for gold tends to increase, which can lead to a rise in its price. As a result, it is a popular choice for investors looking to diversify their portfolios and protect their wealth. Silver is another precious metal that is known to perform well during periods of high inflation. Like gold, silver is seen as a store of value, and during times of inflation, silver prices tend to rise as investors seek out alternative investments that can protect their purchasing power. In conclusion, commodities such as gold, silver, and oil can be a smart investment choice during periods of high inflation. Stocks of companies with pricing power. Investing in companies with pricing power can be a smart strategy to protect portfolios during high inflation. These companies have the ability to raise prices of their products or services in response to inflation, protecting their profit margins. Examples of companies with pricing power include those in consumer staples, utilities, and healthcare. These sectors are less sensitive to economic downturns and provide essential products and services. Consumer staples companies have stable demand for their products, utilities have stable demand for their services, and healthcare companies offer essential services that are necessary regardless of economic conditions. Investing in companies with pricing power can provide stable and consistent returns, even as inflation rises. Treasury inflation-protected securities. Treasury inflation-protected securities are a type of government bond that is indexed to inflation, making them a popular investment choice for investors looking to protect their portfolios during periods of high inflation. Unlike traditional bonds, the principal value of TIPS is adjusted based on changes in the Consumer Price Index, which measures inflation. This means that as inflation rises, the value of TIPS also increases, providing a natural hedge against rising prices. One of the key benefits of investing in TIPS is that they are considered to be a low-risk investment. This is because they are backed by the U.S. government, which is viewed as a safe and reliable issuer of debt. This means that TIPS have a lower default risk compared to other types of bonds, providing investors with a sense of security in uncertain economic conditions. If you live in a place outside the US, there may be such support provided by the government for you. I recommend you do your research. TIPS offer a reliable income stream as their interest payments increase along with the inflation-adjusted principal value. Additionally, TIPS can help diversify a portfolio as they have a low correlation with stocks and traditional bonds, which can reduce overall portfolio risk and increase diversification. Overall, TIPS can be an attractive investment option for those looking to protect their portfolios during periods of high inflation. Foreign currencies. Investing in foreign currencies can also provide an opportunity for potential profits. As exchange rates fluctuate, investors can buy and sell currencies to capitalize on these movements. For example, if an investor buys a currency that is expected to increase in value against another currency, they can sell it later at a higher exchange rate and profit from the difference. However, it's important to note that investing in foreign currencies can be risky and requires careful research and analysis. Currency markets can be highly volatile and subject to unexpected events, such as changes in government policies or economic downturns. Additionally, investing in foreign currencies may involve additional fees and expenses, such as transaction costs and currency conversion fees. Overall, investing in foreign currencies can be a useful strategy for investors looking to protect against inflation and diversify their portfolios. However, it is important to weigh the potential benefits against the risks and carefully consider factors such as currency stability, economic conditions, and geopolitical risks before making any investment decisions. Investing in foreign currencies is a savvy way for investors to protect against inflation. By investing in currencies from different countries, investors can diversify their portfolio and potentially benefit from appreciation in the value of the foreign currency. This strategy can also serve as a hedge against inflation, making it a smart choice for those looking to protect the purchasing power of their investments. In summary, high inflation can be a challenging environment for investors, but there are strategies that have historically performed well in such conditions. We've discussed 5 of these strategies in this video, including investing in real estate, commodities, stocks with pricing power, treasury inflation-protected securities, TIPS, and foreign currencies. It's important to remember that no investment strategy is foolproof, and each comes with its own risks and potential rewards. Before making any investment decisions, be sure to carefully consider your investment goals, risk tolerance, and overall financial situation. By using a combination of these strategies and diversifying your portfolio, you can potentially mitigate the negative effects of high inflation and protect your investments. So, if you're facing the challenges of high inflation, don't lose hope. With the right strategies and a disciplined approach, you can successfully navigate these uncertain times and come out ahead. Thank you for watching, and please make sure to like the video and subscribe to my channel for more informative videos on investing.